Welcome back to another bearish episode of the That Agent Kelly Real Estate Show, the most bearish of all bears in all of Canadian real estate. And today we're going to be talking about how it now takes 6 years for Canadians to save for a down payment. The latest Desjardins Affordability Index highlights. Okay. Saving for a home is no easy feat in Canada's housing market, with the backdrop of high inflation, high home prices, and an unstable political climate. It's taking longer for first-time homebuyers to save for a down payment. The DI compares the average household after-tax disposable income with the income needed to qualify for a mortgage on an average price existing home. So we're talking about how the index actually works. Using the 5-year fixed rate mortgage and a 20% down payment and no mortgage insurance as a baseline scenario. The DI remains near historically low levels of affordability despite recent easing in mortgage rates and some locations falling home selling prices. To rewind slightly, the challenges to achieving the great Canadian dream of home ownership have been both daunting and discouraging in recent years, especially in pricey and increasingly unattainable cities like Toronto and Vancouver. Not that any recent would-be homebuyers needed the reminder, but this includes everything from rapidly climbing home prices, inflation, high interest rates, insufficient construction, and economic uncertainty. So as this lady highlights, over the past quarter of a century, the cost of a home in Canada has ballooned by more than 4 times. Meanwhile, Canada's average disposable income has just over doubled. As a result, the widening gap between home prices and income gains, paired with high rent inflation between 2022 and 2024, it takes potential homebuyers significantly longer to save up for their down payments. So we have a chart here that shows home prices have reached new highs in most provinces, but are well down from their peaks in Ontario and BC. So we have New Brunswick, this yellow one here, still soaring, still an upward trajectory. Nova Scotia seems to be flattening out right now. You have Saskatchewan way down here, continuing their upward trajectory. You have Newfoundland continuing an upward trajectory here. And then way on this side, you have Quebec, which seems to be moving to the upside. And then obviously you can see yellow and orange here. Alberta, BC have been on a sharp tick downwards as of late, way down from their peaks. If you look at New Brunswick, they're actually way above the 2022 peak at this time. Same with Quebec over here. Same with Saskatchewan. And then Manitoba seems to be just now approaching their all-time high. Following the sharp run-up in home prices during the pandemic, the subsequent rise in interest rates, Canadian households entered 2025 still facing stretched budgets. Although average home prices have moderated in some provinces, notably Ontario and BC, most provinces' prices have reached all-time highs. Thanks to the widening gap between Canada's home prices and Canadians' income gains, it takes potential homebuyers significantly longer to save up for their down payment. Assuming households earning the average income save 20% of their disposable income in an account bearing 3%, it would take about 6 years to accumulate a 20% down payment for an average home in Canada, which is like, I think it's $679,000 now, if I'm not mistaken. Naturally, she acknowledges that this timeline is longer in places like Ontario and BC, where the home prices are higher. Conversely, this timeline is shorter in the prairie provinces and most of Atlantic Canada. In any case, Norm points out how rent inflation between 22 and 24 added a further barrier to the ability to save for a down payment. Renters have increasingly struggled with their personal finances, with their likelihood of missing a debt payment now sitting at 1 in 3 people. So then she goes on to talk about how there's all of these programs that incentivize first-time home buyers, make it easier for them to get into the market, like the first-time home savings account. They just recently changed the mortgage rules to, get a 30-year mortgage on new construction. If you're doing less than 20% down, you can get an insured mortgage up to $1.5 million now. And then she even talks about how the proposed GST exemption for first-time homebuyers on new homes up to $1 million may lead to increased demand, which could then drive up selling prices. I heard a theory on this that, let's just say the developers do pocket most of the GST savings. They just increase their prices and then pocket a large portion of that GST if it gets removed, like the profit, right? They'd be able to charge more. Like, let's say 5% of that price gets removed and then they up their price 3%. The consumer still saves and the developer pockets an extra 3%. Well, I've heard a theory where this would actually increase demand on land, because this would increase the profit margins for developers. Therefore, this actually drive up the cost of land, because obviously it makes it more economically viable to now build. Developers will go out there, buy up a bunch of land, decrease the supply for it, and it could increase the prices for land, right? Home price increases have far outpaced income growth. And if we look at this chart, absolutely horrendous. You can see right here, sometime around 2003, our incomes got detached from the home prices and have made no significant headway in ever returning back to that trend line. Now, one of the widest gaps we've ever had outside of 2022, of course. If you look at the price increases since the pandemic, Alberta is not one of the highest. You have Prince Edward Island. Is that Prince Edward Island? Up here at actually one of the biggest gains, followed by Quebec, which is still on an upward trend, followed by then Ontario, which is obviously not on an upward trend. BC is not even in the top 3, apparently, interestingly enough. Norman notes how Canada's home building industry, which has responded to tariff threats as unwarranted and reckless, is about to get hammered by tariffs and retaliatory tariffs, which are now mostly gone, almost to zero, I saw, over the next couple of years. Our baseline economic outlook continues to point to a downturn, she writes. While Canada came out better than expected on Liberation Day, a deeper downturn south of the border and elsewhere could be the drag on our economy. What's that saying? It's like if the US catches a cold, Canada sneezes or something like that. I don't know. Anyways, home prices would need to fall considerably to be affordable. So look at this. So this is the composite home price. So BC, so the green one, this is composite. And it says it's just over $1 million. Let's actually look at what it is right now. So this is aggregate, 1.184. But look, so this black line is deemed to be the affordable home price based on the income. And they're saying it would have to be like just over $400,000. But, it's funny because this line is actually, it could be higher in Alberta because the incomes are higher. But imagine this, if the prices actually came down to this line, where would the price have to be in Alberta and Saskatchewan? Because obviously, more people want to live in BC, right? There's more people who want to live here than there are people who want to live in Alberta and Saskatchewan. Therefore, there has to be a price gap between those assets that are always maintained, right? So if BC ever came down to affordability somehow, you'd be looking at like a $100,000 average home price or $150,000 average home price in like Saskatchewan, Manitoba, Alberta, and all of these places. And look, actually Manitoba is, and Saskatchewan and Newfoundland are all below the affordability line here. So that's interesting. But I want to add that BC is not meant to be affordable, right? Like people, always talk about, oh, the housing should be affordable. Housing should be affordable. Yeah, if it's an average home, it should be affordable. But BC is above average. It is an above average place to live. Therefore, it would make sense that there's a premium price to pay for the real estate. Just like New York is an above average place to live, it makes sense that it shouldn't be affordable for the masses based on the average income for people to live there, right? So I'll just add that point. Despite a softening of home prices, lower interest rates, rising disposable income, and aforementioned government policies, the DIE outlook clearly points to continued challenges ahead. So it's probably not going to get too much better. Affordability is unlikely to improve meaningfully over the next 2 years and then by the time we're at the end of this 2 years, we're going to have no housing completions. Due to the growth impacts of a global trade war instigated by the U.S., interest rates are expected to continue their downward path, helping to lower mortgage costs in our baseline outlook. However, rising unemployment will likely weigh on households' disposable incomes. I talked about this before, right? If the reason why I don't necessarily think it's like a good thing if home prices go down, like in a perfect world, if the economy is great and home prices come down 20%, yeah, that's the best case scenario. But I think we're at, a turning point where if home prices go down further, it's just going to cause unemployment to go up. And then is real estate really more affordable when unemployment goes up? Because wouldn't that drop the average income of Canadians if a whole whack of us were unemployed? On like a statistical chart basis, would it be more affordable if unemployment was higher? I don't know. And while home prices should remain soft in 2025, we expect to see a return to growth the following year with variations by province. The reality is that while Norman says the die isn't likely to worsen in the near term, the softening of home prices in places like Ontario and BC won't make houses affordable again in these notoriously pricey provinces. As down payments take longer to amass, the moving target created by rising home prices can keep homeownership always just out of reach. Those lucky enough to have family who can help are increasingly turning to them for financial assistance. Others are moving to less expensive cities, moving back into the family home, or foregoing the dream of home ownership entirely. And if we look, affordability is expected to improve slightly in 2025. So index higher equals more unaffordable. And we can see Alberta here is just absolutely falling off a cliff. But it looks like the chart in pretty much all of them is starting to turn and maybe head up higher, which would be more affordable in this case. So then she says that, however, it is that we need more supply. Now, 2 years ago, I would have said that. I would have said that we need more supply. Now we have that supply, right? So, the solution now is the prices need to be lower or the incomes have to go up, right? And if the prices go lower on, an aggregate Canadian basis, I don't know if that actually, makes it worse, because wouldn't the incomes drop in tandem if unemployment goes up? I don't know how they calculate these stats. It's just a thought, right? Improving affordability for all, but particularly for first-time homebuyers, will take a combination of lower mortgage servicing costs and higher disposable incomes. The Bank of Canada's policy rate is expected to continue to unwind through the rest of 2025, reducing monthly mortgage payments. Policies such as longer amortizations and reducing or eliminating government fees and taxes on new construction should help to slow price inflation or even decrease the cost of new homes. But policies such as these can boost demand overnight, long before home construction has time to catch up. So we continue to believe that increasing the supply of housing is the primary path to meaningful improvement in home ownership affordability. I got some thoughts on this, right? We should just leave it all alone, right? I don't think we can now, right? Because you've heard my spiel on, once you take too much steroids, you always have to take steroids. But had we left things alone initially, I'm talking like 20 years ago, 2008, before the US bailed out the banks and did stimulus and all this stuff, had we just left everything alone, the free market would have made housing way more affordable than what it is right now. I'll give you a good example of this, okay? Peter Schiff always talks about, if you've seen the documentary they did on Bernie Madoff, right? If you haven't, must watch, was an awesome documentary. But what made Bernie Madoff's Ponzi scheme so huge and last so long, because if you watch it, everybody was skeptical of the returns this guy was getting. They're like, it's not possible. How is he getting this? Blah, blah, blah. What made it worse and threw gasoline on the fire was the fact that the SEC audited Bernie Madoff's Ponzi scheme. And then they didn't find anything and they approved it as completely legit. And then once, it had the stamp of approval, then everybody piled into it and it grew into this massive thing that lasted like 40 years, right? This is basically, our economy, right? Because investors know, like people talk about malinvestment and speculation, all of these things. It's a byproduct of the market not being free. See, because every time things go bad, the government comes back in and starts rolling out demand stimulating policies for first-time homebuyers, for developers, for investors. And, they print money and they buy bonds and do QE and drop interest rates and all of these things to stimulate the demand. So as an investor, you know that, hey, if I buy real estate, it's almost impossible to lose, because the second the prices start going down, I have the government at my back that's going to come in and do all of these things to prop the market back up, right? And it's the same thing when demand gets too hot, they'll come in and they'll roll out all of these things to cool demand so the prices start going down and blah, blah, blah. Now, if they just left everything alone and they didn't do any of that, investors would probably be a lot more careful about the things that they're buying. There would be less speculation. There would be less malinvestment if people knew that they could actually lose their shirts and there was nobody at their back to come and save them if things went really, really bad. So that's my overall thought process. Unfortunately, I think we have to keep doing these things because we've already been doing them. But it's my overall opinion that if they just never did any of it to begin with, they didn't mess. Because like now people are saying like, oh, we need all of these policies, basically, bring down the home prices again. Okay, fair. But if you're going to do that on, that side of the equation, well, then it's going to exist when the home prices need to start going up again. They're going to do it on both sides. And I think they should just not do it at all. But I think we're way past that at this point. Policies should be carefully crafted to provide significant improvements to housing affordability without generating high demand that could drive up home prices. Well, that's like when you bring in like all of these ways, like these cool, like, innovative ways for first-time home buyers to get mortgages. Okay, yeah, those people can get into the market. But eventually it pushes up the home prices. And then you need to bring in an even more robust program for the next group of people 5 years down the road so that they can get into the market. And it's just constantly kicking the can down the road, right? We remain firm in our belief that increasing housing supply is the primary path to meaningful improvements in home ownership affordability. Over the long term, yeah, it would slow the growth of prices. As it stands right now, we have a ton of supply, right? So it's basically just the prices go down or the incomes go up. That's pretty much it. So yeah, there you have it. It now takes 6 years for the average person to be able to save for a down payment on the average Canadian home. And as per this article, they don't see it getting better anytime soon. They said within the next 2 years. And oddly enough, at the end of those 2 years, we pretty much have no housing completions scheduled. Well, very little anyways, 2027, 2028 and onwards. So for the next 2 years, foreseeable future, when we have the most supply we've ever had before and more of it coming, they don't see affordability improving very much. And then after that 2 years, we're not even going to have that supply anymore because there's no new housing completions. So very skeptical of the affordability getting any better 2027 onwards. If anything, it would get worse. But anyways, I hope you enjoyed this video. If you want to chat with me about buying or selling in the Fraser Valley, there's a link down in my description. Otherwise, appreciate you for watching. I am That Agent Kelly. I'm making moves to move you. Peace.